Okay, let's go ahead and get started, and hope everyone's having a good start to their weekend and had a great week. I know everyone's looking forward to the holidays, maybe some time off of work. So markets definitely aren't having the typical start to December that I think they usually do. They're looking for this big Santa rally, and it's kind of been under pressure, but it's not been a straight line. It's definitely, there's been a big battle for control of the market, and you see that going on. And this reminds me a lot of the 2021 top going into December. It was a similar type of topping process and battle we went through in the market, and then the markets eventually rolled over when the Fed minutes came out at the end of the month, if I remember right. That's what the trigger was. That nope, they were going to hike rates, and then the market panicked and pretty much sold off from that point on. And that's when I remember 2021 is when I started my channel. It was December, and it was just because there was so much euphoria, so many call pumpers, prayer groups out there just buying and YOLOing everything they had into the market. And in fact, it was clear to me it was a peak. Just like right now, it's clear we're going to get a pullback. The good thing is right now it's not as extreme as it was back in 2021. I think 2021 was even a more pronounced peak that I was concerned about for technology and growth. And that's why I kept saying, I screamed at the top of my lungs, whoever the 10 people that decided to follow me early on, and maybe you still are out there, about how technology was going to collapse and get out. I started my channel to save people, and 2022 ended up being that situation, which is why I have all the subscribers I have today from that point. And then just did it just to help people. There's just so much bad information out there. So I'm starting to see a little bit of bad information, although I think there's a lot of hope and complacency in the market right now. And I don't think the correction against the April lows is over. And so I still think more selling will happen. The question is when, right? When? And December is always a battle because bears typically lose December. And it's very rare to have a big sell-off in December, but it can happen because December, you have a lot of the market makers, a lot of Wall Street. They want the markets to close high so they can give their clients their report card for the end of the year and show they made them a lot of money and everything is okay. So they keep that money for the next year. They don't, they can show the end of the year, look what we did. So there's a lot of pressure to keep everything, the ship afloat, even if they know they have to mark the market down, as soon. So, and then you have, of course, an administration that pretty much grades themselves on how well they perform in the stock market. They literally look at the market indice every day, and they may say they don't anymore, but they do, and we know the president does. And so you have this also. If you're a bear, you have to fight the whole government, working against your book, and you also have the central banks that are clearly still not serious about fighting inflation. So being a bear is tough. Being a bear is hard. You are basically betting on the institutions and the governments that they're all going to get it wrong, and they all have not been able to lose control. And then you also have retail that loves to just pump and buy during Christmas because they're bored and they're home on vacation or whatever. So you have all these factors. That's why it's so hard to crash the market. So let's look at our screen and see where we are right now, and then we can go into go into everything else. All right, let's see here. Let's go to our screen. Hopefully this works. Good. Let me clean that up a little bit. So yeah, the market right now, right? We see the battle for control trying to happen, and right now, slowly, I think there's a distribution process happening, as well as the bulls are losing control. All right. That's what I think is happening here. And that's a lot of the seasonality and all those other factors I mentioned. Eventually, all the the enthusiasm runs out, the firepower runs out, fundamentals will come back into play, and the sentiment will come in, and the technicals play out, and we go lower. So whatever happens here is going to be just kind of like, a lot of volatile and chop type setup. So we see 5 waves down with this kind of whipsaw connector. See, as you know, can extend. Was mentioned in a target of like 620. It's probably where this could come to an end, at least this 3 swing move, and then you can get a bigger pullback. But again, it could still do this into the end of the year, just like I have here. And if it does that, it just kind of allows the market to tread water. So the most important level is going to be these peaks back, right around Fed meeting time, these peaks back here. The bulls want to take those out. This, to me, is just noise. It's just wasted bullish energy that's just going to waste, and they're not, making any progress. So that's kind of where I see it. So these are the levels that have to get taken out to start to make people and make, the charts look like you have a bigger rally to maybe more substantial highs, right? 700 obviously is the next target on this 3 swing move. But remember, there's a lot of bullish energy wasted in what happened in the last 7 days, 5 days here. So you're going to need even more enthusiasm than you've had, and squeeze. So if you can flip this 690.52, it does open up for another swing higher. If you can't, you're just trading in a 2-wave. You're trading in this 2-wave. And at some point, we expect it to end, and it could end at any moment, even Monday morning, right? Even Monday morning. There's a lot of talk around these files, and people are really angry about what wasn't shared, and they're threatening arrests and impeachments and destabilization type action. Could that lead to a black swan, an unpriced risk? Maybe. Could that force the real thing to come out? Maybe. So we got to keep an eye on that. But we don't, at this point, it didn't really do much to the market. And I would say the yen carry trade also did not really do much either. Although that is going to still come back to haunt the market. The yen carry trade situation with the yen is telling you the market basically. The bondholders and the people that own yen, they are not happy with the decision. They're telling the central bank, the master planners, that they're not tough enough on inflation. They're not handling it properly. So as the yen depreciates, the cost of living for those citizens goes up. Inflation goes up, and they get angry, and eventually they'll get angry enough that the politicians will have to sacrifice the world markets for their citizens, or they won't be running the country anymore. They lose their whole system. I mean, they can't let the currency collapse, right? There's a limit to this, and that's what we're seeing play out in the rates. There's a limit to what the central bank, the planners are able to print to keep the markets higher. At some point, they'll have to decide the markets or the whole system in terms of their currency collapses, and they'll have to make that decision. The charts show 2 paths, right? And we talk about that: the inflationary, hyperinflationary path, and then the more deflationary collapse path. And gold and silver, I think, are telling you that they're making a bet that they're choosing inflation. They're just going to let the currencies free fall. So we'll see how that goes. So the market is, market basically needs to pull another leg lower. I think it's going to happen. And then after that, it could stabilize and you can get a run to new all-time highs. Then when those all-time highs are hit, then I think you could get a crash of all crashes, that maybe people are looking for. And then if these levels are hit and we can't rebound and we get rejected, then the market has peaked, and we'll have probably a historic crash bear market set up. So buying the dip, you can't be cavalier. You can't be so foolish to just put everything you own on the first dip, because remember, you are buying the dip on the grand super cycle. And I know people don't typically like to hear this news, and I get a lot of people dislike my videos when I say this, but because I think they know deep down better. In their conscience, they know they should not have every penny long, everything they own invested in the market. Every dollar is not there's nothing. Their whole livelihood is in the stock market. They're probably 50 or 60 years old in their retirement, and they just don't want to hear it. So they dislike the news. They dislike the messenger telling them, I'm warning them, look at this chart. I show this chart to my 10-year-old kid, and he can tell you where you should buy and where you should sell. A 10-year-old child will know this is probably not the right time to be putting everything you own, every penny, every dollar into the market right here. Just what? For what? Just a little bit more? I mean, think about it. You won. The house lost. If you have held all the way down through this, you won. The house is lost. The casino has lost. You won. But you have to leave with your money. You got to, go cash out. If you don't do that, you lose. You lose, right? Think about this. If you rode this all the way up, if you were successful and you stayed invested and you were just, look at this. And what? You're going to, just for a few more 1,000 points? That's what I'm saying. So, I still think, believe it or not, I think we could go even a little bit higher. And this is what I'm trying to talk about. We pull back and go maybe one more go at it. Right? One more go at it. This may not happen. And if this bounce doesn't happen, you're going to get something like that. And then you're going to get two kinds of bear markets. You're going to get a bear market that looks like this, with a small rebound, maybe a couple years, and then probably back down to here. Some people think all the way down here. Who knows? Okay, what will happen is everyone will lose their money right here on that dip, right there. This is the area where everyone will lose their money right here, because they'll buy the dip aggressively. They will put in every penny they own. They will go mortgage their house to put it in the stock market. You will hear stories of that. If this happens, you're going to hear stories of people mortgaging, doing anything they can to put money in the stock market at this point. But what will happen is this. And then this is the wave where they lose everything. And this is the one where everyone's jumping off of buildings, suicides, or you name it. That's what's happening here. This is that's the trap. So there's this kind of bear market. The other one, which I think we're going to get, I don't think we're going to get that one, guys. I think we're going to get this one, where we come all the way back up here and maybe even break these highs. Years to maybe 10 years of this, and then we get this big pullback. And then we come all the way down. What this is, the way I see this happening macro fundamentally, is bubble bursts, AI, the reality hits. You can't build all these data centers and do this investment until you build the infrastructure. So everything kind of stops and goes back to where it should be. And then some infrastructure stimulus gets introduced because the country will probably be in a massive recession, really bad unemployment. The economy shut down. There's nothing, and then they use this infrastructure and bill and whatever to build out the AI the infrastructure we need for AI. They're going to build all the power, get all the metal, the mining, mines, developed here in our country, in the United States. They're going to do all these investments to get us the infrastructure and build the capacity to have the AI of the future, down here. And they will like all cyclical, they will overbuild the capacity, they will overdo it, and then it will all kind of reset. And then when this ends is when AI really emerges to help benefit society in a way that no one really can imagine yet, and everybody's getting jobs again, or doesn't need to work, or whatever the dream is, and then AI is changing the world. Just like the internet changed the world, and then technology down here kind of took over, right? And that's what I think. And so you're not going to get this big super crap. You're going to get a sideways bear market. Okay, that's what I think is going to happen as of now. I don't think you're getting the Great Depression Part 2 bear market. I really don't think that's going to happen, this one. Okay, so one thing at a time. Good thing is we don't have to worry about that right now. But I just want to show my complete view and get it on the record. It's 2025. My videos will be around a long time. So this is the first step. We're either going to bounce here and make one more high, or it's not happening. So when this when this pullback emerges, you can't be cavalier, or you'll get caught up in the teeth of the first wave down, which I think will be a crash, a market crash. And, we would break the April lows pretty quickly, and eventually we would settle somewhere below those, or maybe as low as the 22 lows is the first wave down. That's what I'm thinking if the grand super cycle ends. And then the nature of the bear market will develop. It will either be in this inflationary like bear market, a 1970 type bear market, or it will be more like 1929. But when we get there, we'll worry about that later, and we'll hopefully see that in the charts play out. And I think gold and silver are telling you, and energy, when you look at those counts, you're going to get an inflationary bear market. You're going to get a rotational bear market. You're going to get a 1970 style bear market. So again, if you think again, a lot of traders think it's going to be easy. It won't be if you get something like this. And that's what the next 15 years of trading looks like. Many won't be around to survive this type of thing. Think about, this is what could develop, right? You could develop a first wave down, a triangle, and then another pop higher. So this could turn into something like this, right? I'm just going to show this, right? Let me show something like this. And then that X wave can turn into something like this, right? Imagine trying to trade that. If you're an indices trader, you're going to have a hard time figuring this one out. Look at that. That could happen, and then your money goes nowhere for a while, right? But look at and then you get to here, and then it comes back like that. So that is what I think the bear market is going to look like. That we'll go into. Something like this, but it's a bear market in the indices, but not in energy and commodities and hard assets and miners. Those will be in raging bull markets, I think, just like we saw in 2021 when the materials took off in 22. XLB took off. So that's it. So let's go to your questions. I think I've got some people that joined, so we can go to your questions, guys. And I just want to talk about what I'm seeing. All right. Let's go to your requested stocks. Tilray first. Some of these I've already been able to look at ahead of time, and definitely got rid of the mouse I had. It was a kind of a garbage, so I got something you don't hear it click anymore, which was I know annoying. So I got rid of that. Okay, so Tilray, coming off the lows, expected this rug pullback. We got it. Now. It's 5 waves are done. So there is a possibility 2 is done already, 2 finished Friday. It would have truncated. There is this gap. I think it's going to double correct. Okay. I can't guarantee a double correction, but it seems like if you get the double correction, you get the head and shoulders, you fill the gap, and then you can buy it down at 871. So for me, I would rather wait and buy it lower to lower my risk than buy it here. But I could miss the move. So that's got to be your decision if you want to take the risk or not. So you'll have to take like a $3 risk if you want to buy it here versus waiting, but you do risk missing a move, and the move would be the larger degree move. MSOS is kind of the same situation. Now MSOS also indicates, so MSOS shows 5 waves up, and again we had a shallow connector here, but a market rallied early, and it's going to make a 5th wave, it appears. As of now it appears, and then once you have 5, we know a correction can't end in 5 waves, it has to end in 3 waves. So that would mean we would get a connector and another low, and it would fill the gap. So MSOS may be giving us the clue that Tilray will do the double correction, because typically it won't end in 5. It won't end with an extended 3 that looks just like this. It's too extended. So typically you'll get a double correction. So that's what I'm looking at here. The other possibility is we erase divergence, and this becomes a WXY, and then we have another little mini crash. And if that happens, the buy area would be 313. So you could still buy it at 313 if, let's say, you wake up Monday and Tuesday, it's in free fall still. I don't think it will be. I think you're going to get a 5th wave and you're going to get a bounce. But the bounce should fail at some point, likely. And again, I think it'll come back to fill the gap. It's just my suspicion. And looking at this, that gives me more confidence. I looked at this subdivisions. It looks like 5 to me. You have the higher high. So you should come out of this situation. So if MSOS is going to double correct, Tilray is likely to double correct as well. Something like that. So something like that. So that's what I'm thinking. Okay. You know, Trump did sign that order. It can be used for medical use. I mean, that's right up Tilray's alley, right? But now they got to actually find a way to use it. So it's a small step in the right direction for this company. Small step in the right direction. So they can maybe build off of that. Now, investors that normally wouldn't buy it can buy it, that have like bylaws that prevent them from investing in this kind of thing. They can now invest. It's kind of interesting. It reverse split back up to be above $3 or $2, whatever. There's a level that big money won't buy a stock below. So it's like set up to go, start to be put into ETFs and all this other. So I think it's gonna just hopefully just grind higher with passive flows now. So that's that. So those are those two. VG, let's take a look here. Let me see. I think I may have had a couple questions. Can you please confirm the pullback targets? Yeah, the pullback targets I gave you one on MSOS, and it's either that 312 or gap fill, and Tilray is the gap fill. Or right now. You have to buy it now and hope it's bottom, but it would be an outlier. It would be moving against what MSOS would be doing. All right, VG. And then, sorry, one more question before I get to VG. At what point will we know if the stock market will have a normal correction or a grand super cycle crash? Okay, so for me, I think the best way to look at that, I think there's a couple things I'm watching to see if that's going to happen or not. I'd like to see if NVIDIA breaks the April lows, but I think for the most part, I would say, like with certainty, like this would make it a lot likely, but not like an absolute certainty. But my guess is, just looking at it, if you want an absolute certainty, it would have to be NVIDIA breaking the April lows, or let me see if there's any other signals I would want to look for. Maybe. I think this is a huge clue if technology can't hold 548, but it's not like 100%. It's like a huge warning sign because it should rapidly deflate, and that would probably bring NVIDIA to break the April lows. So NVIDIA breaking the April lows would be huge. And thinking about it some more, I think the parabolic support, when you go look at the long-term chart, go back to the long-term chart, you know, so I think this was 4,100, but it's probably higher now. So we're still at right around 4,100. It wouldn't just crash in one day, so it'll probably come down 4,100. So breaking 4,100 would be pretty significant. And if you want to be absolutely sure, the April lows. So I think, to me, April lows. So I think that's your guidepost. If you want to know if the grand super cycle and the April lows have to break, then I think you call it. The other criteria is this the RSI trend line. Not many people use this. We can look at it for all the large indices, so you can just take this line and draw it. If that line breaks, the grand super cycle's over. And we can do that with all these. Obviously with the triple Qs, it's the same thing from here. Right? Because if that line breaks, it means you're correct in this whole cycle, which means it's a flat. So if this line breaks, the grand super cycle's over. The SPY, the same thing. IWM, same thing right here. So as you can see, you're not at risk of that yet. Right? But you'll have to wait. So you don't have that confirmation yet. So those are the things to look at. Those are the clues. I think for me the biggest warning sign, like the first like the canary in the coal mine, would be the technology sector not holding this level. And that would mean boxes in our pro group, which is our big cap tech. We watch all our big cap tech in our pro group, and we have a good idea. All our members have a great idea where the pullbacks are going to be and where to buy. But if those boxes don't hold, one or more of those, that's another clue. And my gut tells me is if this box is breached, that will mean Nvidia's heading down to the April lows and potentially AMD. And that's, to me, the collapse, because there's no other count for AMD that I can think of besides a spectacular flat off the grand super cycle, and that can bring you the prices that are unthinkable that I won't even say on my live stream because I would get so many dislikes. But it is a reality, a scenario that, maybe it's a less than a 5% chance, but it is possible. So we have to just think about it. It's okay to think about it. So those will be all the things we look at. That's why people, if you're new and listening to me for the first time, this is why people subscribe. The market is dynamic. Every day we're checking, and we're looking at all these signals, all these levels, and we're formulating our best forecast based on that. And we're always making adjustments. And sometimes big moments happen, and we can make a big change and shift. They're rare, but by following me and subscribing, you get an opportunity to stay aware of when those situations do emerge. All right, next question. All right, let's see here. And question about Bitcoin, will it survive? Bitcoin, every time they said it wouldn't survive, it survived. I think even a quantum attack, I bet it would survive. It would just motivate the thought leaders of crypto. Hell, even Satoshi may come out of retirement to save it, and then Bitcoin will adapt, recover, and believe it or not, it would go back up. So that's Bitcoin. Bitcoin, I think, is designed to survive. It is designed to crash, though, and it can crash, and it can seem more hopeless and bleak. And the day quantum hacks Bitcoin, it will probably feel that way, and it may be in a free fall down. But I believe people will find a way through that, and they will recover. And the people that believe in this, that there's a solution, they'll be okay. But I do think Bitcoin, goes through these bear market periods just like stocks do, and it seems hopeless. And it can go pretty low, right? There's a lot of levels that it has to still go through before it even gets under 20,000. So to get down below 20,000 is going to take a lot of panic and fear and selling. And I don't know if there's enough news and enough sellers left to push it down that far, unless there's an existential crisis in Bitcoin, like it gets hacked. We wake up one day and somebody hacked it, right? And I know, again, I'll get a lot of dislikes just for saying that, but I'm just telling you guys, these scenarios you need to think about. And the day that happens, it will absolutely be below 20,000. It will absolutely be, it may probably be below 10,000. But then what that will do is the people that care the most about Bitcoin, the super whales, the ones who invented this shit, are going to get together and go, our golden goose is going to die if we don't fix it. And they'll fix it. So they can either fix it now, before that happens, or they'll lose all their money and they'll make the market will force them to fix it. So they've got two paths in front of them. And I'm sure, believe me, they're talking about it right now. I know they have to be, because if I had my whole net worth tied up in Bitcoin, like most of these guys do, you gotta be making some plans, right? You have to be figuring this out. You can't be that naive and foolish to think that will never happen, right? There was a quote I read from someone I follow that said, "No lock has ever been designed in all of history that a human hasn't been able to pick," and this will be no exception, right? Humans think they're so smart they could create an encryption so perfect that no other human and nothing could ever break it. There's always someone looking to pick a lock, and they'll find a way. And it will happen. And then the people that say, well, the financial system will collapse, your banks, because they use the same, well, sure, that will happen too. Well, hopefully they're working on it too, because those threats are out there. And that's just the way it goes. So maybe we need to own some hard assets. Maybe go buy some silver and gold bars and tuck them away under your mattress. All right. So that's my thoughts on that. So guys, let's go to VG, the next here, VG, Venture Global. So we have not a lot of price history, which makes it difficult, but we have 5 waves down. Because we have 5 waves down, we would have expected another swing lower, which is exactly what you have. Now you have almost another 5 waves finished. So you would assume it's good. Let's go buy it. The correction's over. So we need to look for clues to help us understand if that's the case or not. Because we don't have a lot of data, it's hard to do a proper RSI analysis. Clearly, this is 5 waves down. 1, 2, 3. There's your 3 of 3, and then your bullish divergence for 5. So it's going to bounce soon, or any moment. You're going to get wave 2. Also, here you can see it's starting to bounce and correct the daily cycle as well. So a bounce is coming. The problem is we don't have enough data to know if it's the major low or not. So I have this as like more of a worst case look. Typically, the market likes to move in this equal distance, A equaling C, and that would drop it down another leg. So it could do something like I have shown here and make a bigger move down in C, or it may be done, the whole correction. It would be short by that, it would be truncated, and also it never made it to 375, which is usually a more bullish way to find a target on an instrument that's going to try. So to me, it's too early. When I look at this, not to say we've seen charts that do bottom this early like this. It's happened, but it's not common. So maybe once you get maybe the way to trade it is once you get the clear sign of a reversal, which you really don't have yet, but you may get very soon, then you can just buy it and put your stop at 571 and see if the market will come back and take you out. There's always gap down risk, especially in stocks like this, because if you do hold it, you could wake up one day and lose 30-40% and not know what happened, because this would be a 3, 1, 2, 3. So there is gap down risk on stocks like this if you play that kind of game trading, but that's your call. SMMT, looking at updating this to, it's moving in 3-wave increments, 1, 2, 3. I'm not seeing it moving impulses. And then you have an ABC structure with like a triangle here that's about to finish. So X could be done just right now. Again, same conversation. Buy it, put your stop at 1553, or it could continue to make a more complex correction, right? It could do something different like this, right? It could still even extend 5. It could even extend C and do something like this. So a lot of possibilities, right? It does look like it's trying to turn higher. That trend line looks like it wants to break higher. The daily cycle wants to come out of that. The 4 hours already wide open to the upside. So my guess is it's bouncing. Okay, it's going to bounce. It's in the process of bouncing. Okay. Okay. So there you go. Next question. Solana with downside targets. Let's look at Solana. Let's take a look at Solana. How is that doing? So this is our graph on Solana. Haven't updated it since our last live stream, I think. Continuing to bleed lower, slow bleed. Slow bleed. We could try to understand this. It looks like it's a leading diagonal down here. 1, 2, 3 for 1, 2. 1, 2, 3 for 3, 4. 1, 2. So it's a leading diagonal. So probably another 1, 2 here developing. I think, again, there's a lot of ways to count these these corrections. So it's probably another 1, 2 here with 1, 2, 3, 4, 5 subdivided in 3s. It looks like it's back testing a line that I've used as major resistance. And why did I draw this line? It goes through a majority of the wicks, right? That's why. So support is now resistance, right? That's what's about to happen here. It's about to, it's about to find out, right? It's about to find out. Support is now resistance. And if that's the case, it's about to have its big moment of 126 going down below 100. So I think it's about to have its big whoosh moment into our box. And this is the box. So it could hit $90. So that'll be the first area of support. This area. And if that can't hold, it will go deeper in. There's no chart support anywhere in this area until you get to the 40s. It's hard for me to believe it's going to go that low. Looking at the structure, because remember, we have to zoom out. Look at this whole structure. It's pretty much been in a free fall since September, and it has not corrected this cycle. This whole cycle has not corrected. I don't know if does it have enough energy to get, doubt it. Does it have enough energy to get to here? Probably. So even if we're going to go down to the 40s, what I would expect the count to turn into is this. That's how you get to the 40s, something like that. So I think we'll bounce here. After that bounce, like Bitcoin, we don't know what's going to happen. So, but I think I'm not even interested in looking at it until we're in the box. And that's been the, kind of the right decision up to this point. So just kind of got to sit on our hands. Now, this, just like Bitcoin, is tied up in a connector wave. And like we talked about, I'm showing the bearish interpretation, but we could still be in B. Or if we come back like an A, B, C, like let's say we do that. Let's say it's a Santa Rally squeeze, the Santa Rally crypto squeeze, and we get this, and that, okay? And then we get the collapse. So let's say if this happens, what we're saying is the correction ended here actually in 3 waves, right? So we would just say W, X, Y. You see what I'm saying? That's why I'm not telling people to short it here, right? Because what if it's that? Then you get blown up. You see, this is better based on my system and style of trading to just sit on the sidelines and wait. And for me, I'll be so patient. I'll wait a year if I have to get to my levels. I don't need to trade Solana every day or any of these coins. I have no emotional attachment to any one of these coins. I could care less. One day I'm a Doge holder, next day I'm a Zcash holder. I could care less. I just care about setups and making money. That's all I care about. That's all I care about. I don't have any personal affection for any of these. I just watch them. But right now I'm not in it. Not even interested, because I know this is going to take time to develop. Now, like I said, I've given you my best idea where we could be, and so let's see what happens. And I think we'll know pretty soon, right? If this is the count, right? Pretty soon. So good luck on Solana. Next question is about Japanese yields. Central bank. Yeah, the Central Bank of Japan raised rates, but it was just not impressive enough for their bond holders and currency holder, and here it is, their banks, and there it is. So the Japanese 30-year, I charted it. The RSI analysis looks interesting to me. So you see we have a peak here. So we're still in some 3. When we go to the shorter cycle, we see the divergence here. So we're in a 5 of 3. So this move's about to end. And if we look, go back to the lower cycle, right? Let's take a look here. If I can do this right here. Let's see, what would be a better angle? This one. When I look at the monthly cycle, this peak in 3, and then you have 5. So my guess, labeling it, again, looking at it, just kind of looking at this, I suspect this is the count. If this isn't the count, and we're either in an extended 5th wave that's going to end, or the other count is more bullish, and it's this. And this is bullish for rates, by the way, something like this. Okay. So it's kind of like 50-50 which one count to go with, but both counts show more upside. So the rates should continue to go higher, but short term, you see, it's going to pull back. So someone I follow, very good macro forecaster, basically the way they're interpreting this yields in the Japanese yen is the yen carry trade problem will come into play when the yields start to fall. Okay, that's when that yen carry trade collapse narrative emerges. What's the tail leading the dog? Is it the bond market selling off, or is it the carry trade pushing the yen strength? Who cares? But if that's a signal, and if that signal is real, well, then we are about to get a pullback in those rates. Look at the weekly cycle. Look at the monthly cycle. Look at the daily cycle. There's bearish divergence on every time frame. So regardless of what the count is, whether I label it more bullish or the previous count I had, that 5th wave, I go back to it. This one, a pullback is coming. And if that pullback means the yen carry trade blow up, well then I guess we're about to have a yen carry trade blow up as this pulls back. Because remember, this is a multi-year. Look, this wave started in 2016. This won't be just like, oh, it's done in a couple days. No, not a couple days. So that's probably coming soon. So again, looking at the chart, 5's either done here, and this is a sucker's rally in yields, right? 5's either done here, and it's this. And I guess the yen carry trade issue emerges, and this was a fake out, the post meeting, and they may have done this intentionally to try to support the market, through that announcement, and then they'll just give away that support at the end of the year. Or it breaks the high and it extends 5, but it's so extended from this low down here, uncorrected. I mean, can it really push up much higher? So I wouldn't be surprised if we get a flat. And the currency may be also looking at that, the yen itself. So I wouldn't be surprised if you get something like this. So that's what I'm thinking at the moment. And the 10-year is similar. It's a similar count. The 10-year has a more bullish interpretation, right? It's a more bullish interpretation, but we should be topping. So the 30-year looks worse. The 10-year looks a little better in terms of not ready to free fall, but it still has a lot of divergence here on the weekly and on the monthly. So again, I have it labeled this way, this aggressive view, but I can change it and make this 5. You see? I can make that 5. And if I make that 5, well, we know what happens to extended fifth waves. It collapses. So the problem is there's probably 2 or 3 counts that are just as relevant. But whatever the count is, a pullback is a coming in rates in the yen. And if the pullback means the yen carry trade blow up, well then you better be ready for a yen carry trade blow up and a volatility event. And I think that's what all our charts are saying. VIX is too oversold. The yen is too weak. It needs to pull back. The market's ready for a big sell-off. It's all lined up. But that's the chart we're seeing. So we're gonna get a pullback. I wouldn't worry too much about the count. I would just worry about there's a pullback coming. It probably will not be in one day because it's going to correct a multi-year cycle, and then it should continue higher. It should continue higher. Because every count we had has it either as 4s and 5s or 3 of 3. None of them have us in a 5. A 5 like this one. I guess this one could be. Maybe this is the only one. Because if this is a 5, then maybe this one would have a bigger sell-off. But that would go against the 30-year count. The 30-year count doesn't show that because this peak took this out. So that's why I don't want to, I want to be careful with that. So I think right now I'm going with this this view, and I think. Again, just kind of looking at it for the first time. I don't really study the Japanese bond market too much. I think I'm going to call it extended fifth wave and some kind of 3. So something like that. So we don't have 5 up, so we should still go higher. So whenever this 4 comes, we should get 5. Okay? That's what I'm thinking. Something like that. And then the 10-year, probably the same thing. We took that. Now this one, we took the peak out. We can't put 3 here. So the 10-year is different. We'll probably do the 10-year like this. And we would expect it to go higher because of the other chart. They probably will trade together. So again, something like that. I'm going to go with this for now. It's just kind of looking at it. I think the 10-year, this really makes a lot of sense. This really makes a lot of sense on the 10-year, looking at the RSI. The 30-year had a couple mixed messages. Looking at it, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. And then the 30-year will just match it and use the one that matches it. See, this peak, taking this peak out, could make it be a 1, 2, 1, 2. But then it wouldn't really align with this forecast. So I think we'll go ahead in the monthly, the higher cycle, we'll have more confidence and we'll take the 5. But this has made an extension. So therefore, I think I'll call that a 4 and a 5. Versus another 1, 2. So something like that. I think the best takeaway, like I said, is a pullback's coming in rates. I think a pullback's coming in rates with more upside. That's what I think. All right. Next question. SoFi. Definitely a company I don't quite understand, but a lot of people do love these guys. Again, looks like a fifth wave. But if you look here, you corrected this cycle here. And then you have divergence at this peak. So more than likely, that's your 1-2 right there. That's probably a 3-4. So it's probably a 3, and you're probably in a 4 wave. So probably get something like that. That's what I'm thinking. And of course, this is kind of the tricky part. You see, you have that bullish divergence. It's very interesting because typically we would expect a flat. So the question is, will we ever get to 5? Could this be a flat off a 3? And we have to respect that possibility. It actually is falling a little short. So you got two possible paths. You have this bullish path here. I just label it like that. Or again, I hate doing this, but there's this other path that does something like this, right? And you get more of a flat scenario. 1, 2, 3, A, B, C, and then you come back down, right? You come back down, and let me do this again here, like this, like that, right? And then this is something like that. So, and then you resolve this irregular bottom. I think my suspicion is I wouldn't be betting on something like that anymore with this, although I can't rule it out. So maybe less than a 5% chance. This is less than a 5% chance. For this to happen, I would need to see probably this trend line break on the weekly. That trend line breaks, or price. Let's look at this 4-wave. See, 4-wave can still go pretty deep and still be 4 here. So yeah, I would say you won't know it's a flat until it's probably too late, unfortunately. So you either have to be a big believer in the company and stay long, and just stay long, or you would, you're going to get caught up in a flat. So I think we won't label it as a flat. We'll just assume that's the low, and we'll label it from there. And if I see it differently, we can update our chart, our forecast. But it looks like you've got a 3-wave move down here, and basically on this 4-hour cycle, if you break this line, then the bottom's in. At least you can say 4 is in. So I think we just call 4 in. It looks like it's about to break, and then that would give you more upside. Let's look at this wave real quick. Yeah, so I would call it. I would just call it this for now. One more high in the cycle. A break below 25.12 would open you up for a double correction. Open you up for a double. The other there's always another path too. Could be a triangle like that. Still gets you higher. If you do the double correction, the level would be around 2121, 1903 if you do the double. All right. So that's kind of the count in SoFi. So good luck on that. And DJT. So we've had this charted for a while on our group and stayed away from it. And it does look like it's finished, right? It looks like it got finished this cycle here. So is the whole thing done? It might be, but my guess is it's just gonna correct. It's correcting the It's correcting this three-leg move, right? That's why it's such a big bounce. See, it's correcting the whole thing. Corrected the whole thing. So the bounce was big, but am I a buyer? The bigger picture, I think you made a lower low. Did you break this low? Looks like you held it just a little bit. So nice reaction. This cycle's over. Okay, the cycle's over. So we just assume it's bullish until we see it break down again. So the cycle's over, and now you're in some kind of a new uptrend, and you want to see 5 waves, right? So we don't have 5 waves yet. Let's see here. I lost my RSI. Yeah, see that that's this is an extended 5th wave. So actually, it's probably finishing up the 5 waves. Let's take a look. No, actually, I would label it like this: 1, 2, 3, 4, 5. So we'll put the 3 here. So we're in 4. So you would expect something like this and higher. If it can't make the 5th wave, if this 5 can't happen, it will melt down and go to new lows and essentially, you know, essentially go to 0, right? It'll go to 0. Also, this represented a back test of that support, right? Why does that line exist? Because I just kind of drew the line, or horizontal line. It probably even connects back through here, through that, and that's where it hit and got rejected. See that? Isn't that something? So I think it's 50-50. I don't think Trump's popularity is very popular right now, but hey, I don't know why this stock trades the way it does. I'm not into DJT. I don't know what it's all about, but if it's a gauge of his popularity, I don't know if I want to be an investor in that right now. But it may be other dynamics. I think it's just oversold and bouncing. Okay, let's go to the next question here. I've got I'll go to people's comments after I go through questions. I'll read through the comments like I normally do at the end. Newegg. So Newegg looks like it's trying to double correct. So I kind of mentioned before, if we don't get that 5th wave, see how we didn't get it? It could. That's the warning sign. So that sometimes happens when you buy the middle area. If you buy the middle area, and so it decided to do a double correction. Let's see where we are with it. So that sets you up for 38.82, coming back down to 29.24. So there's a box here, dip buy area, speculation, area, to see if it will hold that. It would be a bigger 3-wave move. So that looks pretty clean to me. I mean, it looks clean, but nothing's guaranteed in this market, as we all know. So that would be a double correction. So there's your box. So I would that's the area to probably wait, something like that. And see, it's going to have to raise that divergence. So it's probably about to make that push lower, right? It looks like it's got a W, X, A, B, C. So it's got another push down. It's probably doing something like this. And this is probably like ABC here. So it's, it may be even a shallow B. If you look at it, it's correcting that whole leg. Something like that. All right, MLGO. Also, I'll say about Newegg, since it broke this low, typically if it rallies in 3 waves, it's a short now. until you get to this box. So now it can be shorted until you get down here. So 3 wave bounces are shorts now. So now you flip. Now you flip, and then once you get to the box, you flip long again. But right now it's got this. So if B wants to push higher, those could be short opportunities. MLGO. All right, let's see what a mess here. Let's try to see where our labels end up. Let's try to do what we can here. So now it's like, what degree 4 is that? That's what we probably need to know. So we'll just kind of remove some of our subdivisions so we can see it better. Okay, so this 4, correcting the leg from the top, from here. It's actually, let's see here. ABC, so it's moving in 3 waves. So we had it labeled as an impulse. It's actually moving in 3 waves. So this is sometimes tricky with corrective structures. Is you have to pick, when they start, you have to pick one. I always assume impulse, and then as it develops, you can adapt it into like, okay, it's actually moving in a WXY pattern, which kind of would shift the way you label it and look at it. So something like that. So as a WXY, it looks like 1, 2, 3, 1, 2, 3, 1, 2. Again, I would put it there, and that's where it actually bottomed, as you can see. So I suspect it's another connector wave. It's probably going lower. So I think this is the bottom here, and it's doing so it did something like this, and it's gonna make another leg down. Right? Because remember, we had all those incomplete wave 4s, so it's just taken on a different structure, and it's just going to do something like that. So it's got another. It's probably below 746. I would expect more downside, but now you would want to label it in 3 waves, and that may make it a little easier to trade this now that we know kind of the personality this has. So something like this, and this may take time to develop. It may have to go through another bounce like that. So I'd be looking for this type of move, and again, I would look for short opportunities in big 3 waves, but I wouldn't do it. This one I wouldn't do on. I would wait a higher time frame, like so maybe at 839. If it ever rallied up to this area, that would be the area. And there would be a bigger swing up, like a bigger squeeze. But right here, I would just expect it to go lower, and it's because of how it bottomed here. And that's kind of it. All right. BBAI, let's take a look at how that was doing. I think we were expecting that to push lower a little bit more. And looks like we were starting to get that. And again, we're looking for it to break this low. Now, I don't particularly like that labeling, honestly, but it does seem like it needs more downside. It's in a big connector. Let's just kind of step back and see, could it be morphing into a triangle or something? See, I don't think so. It doesn't really have that look. So I still think it's going to do something like this. So BBAI, like the AI sector, I don't think is bottomed. I think it's in a decline now, despite the rally recently, the last few days. So I think we'll update our labeling to be a little more bearish, a little more aggressive on the bearish side. and I'll have to confirm this label in a minute. I'm going to assume the RSI supports that. You know, something like that. Let's see here. Yeah, so going back, so RSI does not support that kind of label, so we'll look at it from another point of view. 1, 2, 3. Let's go back to the 45. So that's a pretty big bounce here. So that's definitely 1, 2 right here. And then 3 waves. I wonder if this is still in the 2 wave. I bet it's still in the 2 wave. So yeah, so maybe again, maybe it's still in the 2 wave. It's just not finished like Nasdaq is, right? Nasdaq could still be in that 2 wave. So my guess is it bottomed here. Maybe something like this. I don't think that's 5 up. See, if it was 5 up, I could put C there and call it finished. So I would, this is what I'm gonna label. I'm gonna label it like this. Would I buy it, hoping for a little pump? Hell no. But I mean, I wouldn't be surprised if this goes a little higher into the end of the year. Something like that. That's what I'm thinking. And then this, you know, again, how deep? I think this bottoms when the AI sector finds a low. And again, our pro group, our members are watching that and have a good idea on when that will happen. So something like that. This is what I'm thinking. If it could somehow take out this peak, it negates the bearish view. And remember, ultimately, we still expect it to go higher. Just I think it has this detour it still needs to go through. All right. So let's take a look at the next set of symbols. FRHL, F. PALAF. And then BRKB. All right, let's take a look here. Freehold royalties. I mean, we may not have all the RSI data correctly. We need to do that early part of the correction. See, this almost took it out. So we're just going to assume it's bottomed here. We will analyze this portion. Looks like it corrected. It's coming off of that correction. What I don't like is there's no divergence on the weekly, on the monthly RSI, but you do see a little bit on the weekly, which I'm okay with. I think when you zoom in, it's okay to see that. So I'm fine with allowing that situation. Well, it's probably right down here, like a 1, 2. So probably like right here, 1, 2, 3, 4, 5, and then you have 3 waves down and 3 waves up. Normally you come back down to the 4, so I suspect it's going to do a double correction, come down, and then of course come out of that higher, and I believe it's about to make the turn down. See, so I think this is what my view would be right now. And so there's a box. like 492, 339, somewhere in this area. So that's probably where you're going to go with it, and then because it's typically what we see, and then you come out. If you can make a 4 and 5 on the shorter cycle, which you don't have right now. See, right now this is just a 3-wave move. If you can make a 4 and 5, at least get weekly divergence like you have here. You see how you have that here? Like you need something like that. So I think looking at it only looks like an ABC move up. You know, maybe something like that, you know. Let's see here, maybe put that there. So I think you need either a 4 and a 5, or it's going to do this. So it's a little too early to say the turn's in, but it lines up with the rest of our forecast for the metals and everything to go lower. So I think it would be dumb for me to say it's going to go higher, and every chart I shows the metals going lower right now at this point, or about the top. So I think, you know, something like that is what I would expect. DNN, probably kind of the same chart. We'll just assume bullish from that low. So this whole cycle ended here. So this made a full cycle right there. Let's take a look. So you have a 1-2 here. And then you came up below this peak, above that peak. So you're in something like this probably. Right? I think it's once that. The other thing is it could still be in another 1-2. Yeah, I think I'd label it more aggressive. So this 2 can go deeper, and if the other miners are going to double correct, this could also go deeper on you. As long as it's above that peak. So I think it could double correct with the rest of the miners. But I think this one has much more has a lot of bullish potential, and it's got some options. What kind of mining is it doing? Uranium. Yeah, if it's following uranium, it's probably going to do a double correction. 170, 142. So I'd be looking at it right here. Right? Something like that. That's what I'm thinking. PALF. Looks like we had a... wonder if it's a lead-in diagonal coming out. We'll take a look. See what's going on here. This is the tight impulse here. It's just a tight impulse off the first move. And then a 1-2, something like that. A lot of overlap, but that's the count. I'll go with this count for now, and then if it's this count, it would of course pull back soon and then out. This is a conservative view. The other view, it's 1-2, 1-2, and this thing's gone next week. What does this one do? Let's see what these guys are about. Uranium. Yeah, wouldn't be surprised if it does this. Because my forecast in uranium is still another leg lower. All right. GLW. Here's our count. There's a wave 4 cluster and chart support. I think significant chart support right here. So a stock like Corning is telling you what the future bear market could look like. Right now, of course, there's a lot of white space to correct. This could correct. So I have this as a impulse 1, 2, 3, 4, 5. Right, that's a conventional impulse. But it also can be more aggressive because it has more space to cover on the upside, and I could do something like this. And I wouldn't be surprised it does something like this, and then just moons. Okay, there's a lot of stocks that are going to pull back scary, and this may be one of them. Whether it's a 2 or a 4, there's a lot of stocks, but then their future looks really good, and it leads me to believe why I think infrastructure cyclicals are going to be the next cycle in this market. Whenever the big sell-off happens, not a Great Depression sell-off, right? So there's your new box. So could it be 2? If looking at where tech is, and that's the aggressive view, it can always, if it's going to correct this whole leg, then it could double. It could do a double correction. So I think I think this is where I would be targeting it right now. I'd be targeting that right here, and it looks like it's got a very bullish setup. And again, this is telling you kind of a clue about the future, right? What's the future going to look like? You know, that's what it's telling me. I think, to me, that's what we'll go with. We have to stay above that peak. So it's got room to correct. I mean, it's got room to correct. So I don't want to give people the impression it's going to go take off. Like this too could it could consolidate for several years in this too. But it seems like it's getting close to a major peak, and it may have already peaked. If it keeps going higher, well, we saw with the metals, we'll just keep extending the fifth wave. So it's probably, the idea is to buy it in 3 waves and just see what happens. BRKB. Berkshire. Let's go to the monthly. So what's interesting about Berkshire, you see all the RSI is way early in the cycle. So either your wave 3 of 3 is down here. So either you label it that, which means it's essentially going back down to $1,000 or whatever, right? That could label it that way, or we can't go with that view. We have to go with something a little different. One cycle completed. Now you have the next cycle. We'll go to a shorter time frame and see if that's 3, 4 or not. I think from my point of view, that you see how we peaked, but we didn't take out the earlier peaks. I still won't call that 3 and 4. I think I would call that another 1, 2. But you see, it can't go below there. Look, the one thing is interesting is look at the hidden bullish divergence. You see how this fell on the weekly cycle down to 35. The price hit $88,542. And if you go over to the similar cluster where the RSI was that low before, look where the price was, 5,323. So that's a lot of bearish energy wasted and a lot of dip buyers buying the dip. So I don't know what he's rotated his money into, but whatever he's in is going to do really well in the future. So I think he's in a lot of energy, right? I think he buys boring companies, railroads, and shit like that. I think that's the stuff you want to be in. Those are the charts also that show me that the future's okay. Big cap tech doesn't show that. The indices show erratic and potentially crashes with huge rallies, but there's other sectors in the economy that don't look like that, and that's why if you're kind of paying attention to these things, you're gonna be able to take advantage of it. So I think this is another 1-2 of some kind, and the question is what happens here. I think I think it could double correct. Is there enough room? I don't know. I don't think there's enough room for a double correction. So then the only other view that I can think of would be just to do the conventional 3, 4, and 5. And then it crashes to 0, goes all the way down. So I just, when you look at the RSI analysis, it's hard for me to think that. So a stock like Berkshire Hathaway is also telling you that you may not want to be, like Great Depression bearish on the market. You may want to be like, hey, there may be other things that will be in a bull market when technology crashes, if that's going to happen, right? There's going to be other things working in this market. So this will go at discount. I mean, I think looking at it, could it do a double correction? It's possible, but it has to hold. It has to stay above this low right there. So if it's going to do a double correction, it's got to stay above that. If it doesn't, well, then it's correcting the whole thing, and then you're forced to say, well, it's some 5-wave move up. Then you're forced to label it this way. You have to, then, no matter how, you can't be a permabull. You would be forced to label this as a 5th wave. You would have to go into some kind of label that I know seems unthinkable, and then you would have to call that peak in. You would have to call that. So I think if I want to analyze Berkshire Hathaway, a double correction is allowed, but it can't be very significant. So it's going to have to double correct down to, maybe, if it were to ever double correct, it would have to probably hold this box here. There's no more room for a big double correction. So it could still double, like a quick little flash crash to 83.57, but it can't. It could probably still keep the chart together. Again, this is using my system, so a lot of people won't understand this, but this is what it's saying to me. So it could double correct into this box and go like I have here, but if that fails, chances are the RSI pivot's broke. And then you have to label it as a complete grand super cycle. There's no other chant that works. So, and then of course the next area, the buy it, would be the more conventional, view. It would likely fail the first bounce. So the next area you would buy it would be right here, 7,152, 6,591. Likely that bounce would fail several years later. But So that's kind of the setup. Off the low, you don't see an impulse. You see, it almost looks like a bear flag. So really, really tough situation here. I think getting back above 9,500, 9,600 is important. If it falls this, I think it could still double correct and be okay on the chart. I think it could still double correct and be okay if it does that. But if it falls any further, it's likely to end the whole cycle, which means the grand super cycle is over, and there's really no other way to label it but that real bearish labeling, and then that would get you down to something like this. Something like that. That's what will end up happening. So that's kind of my analysis on the stock for Berkshire Hathaway. I think with the market backdrop and where the financials are, I think a double correction is highly likely. It has to hold this box if in it, just like it seemed to hold up really well through this sell-in. But if it can't hold that box, then you're going to get this. Something like I'm showing here. Now this X wave will rally significantly more than likely, and it may even come back as a flat, which I wouldn't be surprised that it mirrors the indices a little, especially if it is a more of a cyclical bear market where the rotational bear market, because he'll probably do better. So probably do something. So that could be a likely structure that will emerge for the next 10 years, something like that. If it's a Great Depression crash, well, then you're going to get that. Then you're going to get the worst case scenario, something like that. So more to come. I think we got to just keep an eye on it. I don't really have a lot more insight on that than this. All right, next is another question on Commerzbank in Germany. Let's see if here. It's one of these. I think it's this one. I think we have one of these charted. There it is. Yep. All right. So we need to see what degree that 4 is, because again, it's always easy to be off by a few swings. So it is the right labeling as of now. So it's 4. So again, we're just kind of tracing the labels out, right? We'll get rid of some of this. There's no point of having the subdivisions there. It just makes it hard to read the chart. And definitely was a good call buying it down here, right? Now it's, you know, like anything, everything come, you know, it'll go back down, right? And someone I know follows me, they get mad when I do this. Well, look, because I just can't, unfortunately, TradingView is the way they work, so I have to put it somewhere, but sometimes I don't do that, and just the way it is. But I think it annoys some people when it's like that. I don't know. Okay, so there it is. So Commerzbank upside left. I would look for a chart. This is going to hit chart resistance. This is going to hit chart resistance. Just looking at this, I mean, this is your upside 46. I don't think the 45, 46. Of course, you can wick through it. Perhaps you can catch 50, but that'll likely slam back down quickly. This is your. I mean, if you bought here, this is your sell area. If you're a trader, buy here, sell here, right? Now, the problem is if you're an investor, you're trying to time the market. And I always tell people timing the market's quite foolish because you're going to miss the big wave 3. So, but that's your decision. I don't know your strategy and what you're trying to do, but that's your answer to your question. So there's your upside. I think that's the upside potential. And then you'll get a 2. But with everything, it should continue higher as future goes on. Okay? At least another swing, I think. Now, overall structure. Only problem with the overall structure is we still haven't got the 5, right? The wave 5 we need. Sorry, get that. We haven't got the 5th wave. We need. The problem is, can it be corrective? Look at the bottom. I just want you to see the bottom. The bottom does show a dangerous setup because of this 3-wave move. Look. It's not 5 waves. So there's a possibility once this impulse finishes off the low. So this one here, once it finishes, there may not be a wave 3. It may just go. So you got to also think about that too. So that's another thing. So I guess noticing that maybe as a long-term investor, you got to be a little more careful, cautious. Because there is that possibility, the way it bottoms. And we see this a lot because it bottomed with a lower low. But this has definitely been a nice run. And I think people will see this like inverse head and shoulders trying to emerge. And maybe we'll keep an eye on it. Yeah, thanks. Appreciate the DVLT shout out. Yeah, it sucks. I think DVLT just caught the market at the wrong time. It was the right stock, the right setup, but the wrong market conditions just hurt it. If it was any other time, it would have ran. Like if it was back in July, that setup would have produced 400 or 500%. I know it would have. It was just, and the thing about DVLT is it's likely to still make that high. It's just going to morph into a more complicated corrective structure. So we won't forget about it. We'll keep an eye on it. But thanks, appreciate that being understanding. But that's the thing I always tell people. Not all our trades are winners. No trading system's 100% guaranteed. If you follow and they tell you they're 100% right, or they're 100%, or they're guarantee results, you need to run away from those people. I'm telling you, it's not realistic in trading, and we all know that. There's some guys I follow that are trading longer than most of us have been alive. And they trade for a living. They made their, they raised their families on trade, all this, and their win rate is 50%, and they're still very successful. and they're very good. I don't think you would argue with someone that's been traded the 1970 bear market, a win rate of 50%. And that's still okay. So that's what I'm telling you. You don't need a huge win rate. You just need to know how to trade as a trader, and cut your losses quick and let your runners run and compound. And then you don't need a super high win rate. Like, I think someone's like, well, if I can do 100% on each of my calls and I get like 8 calls right in a row, I'll make $1 million and I'll just do that. It's just, I wish it was that easy, and there's no trading system that's going to ever produce those kind of results repeatedly. So just know that losses are part of trading, and it's no different. But if you hear anyone say that it's not, run away. Turn your computers off fast. All right, Puma. Yeah, I just went to the Puma outlet, so I helped you out, man. I just bought some Puma gear. So let's see what they're doing. How they're doing. Oh, well, they're close. They look close. We know stocks like this are getting close to major lows or have already rallied. I have a feeling it's probably bottomed. It's ready to go into a bigger bounce. Yeah, I mean, look. If I were you, I would just assume the bottom's in. You see, this is going to break soon. Look at that. I mean, again, we're seeing the retail stocks in the U.S. really doing well. I wouldn't imagine this bleeds over. So anyway, I would assume this for now. Maybe it's in a flat. It could be a 1-2-1-2. Not a lot of data to work with. I have a feeling that 138's the low. Okay, that's an easy one. All right, how much sustainable upside? Well, I mean, depends on the chart. I mean, the chart shows potentially a major low struck. I mean, it could go into a new bull market. This could be long-term investor opportunity, right? So the upside depends on your time frame. So as long as this low holds, you can just let the market decide for you. I mean, we see major retailers in these major downtrends. A lot of them have already are starting to turn. Some are still looking weak, like Nike, of course. But even Nike still has a path that it could pull itself out of before it goes into free fall. So I would assume the bottom's in. I think let's say the bottom isn't in. It's going to go into a bear market. Typically, you can try to retrace 50%. Chart resistance is probably somewhere around here. So look for like 488, $5 as just a healthy relief rally, right? Even if it's going to go like something like that, even if it's going to go to zero, that's what I would look for. Right? Sorry about that. PSM. Well, charts like this are kind of ugly. So it's making an impulse down, it looks like. Although you see that bounce was pretty significant. So it's probably more like this. You see how that peak took out this level, but we didn't erase that divergence. My guess is it's going lower. That's what I think. It's going lower. And let me just think about it for a minute. See, the question I have is, should I label this as a 4 and a 5 or a WXY? I think I'm going to label it as a 4 and a 5. Because, let's see here, 1, 2, 3, 4, 5. I think that's the way we'll label it. and then the bounce corrected this cycle. This was a fifth wave. I worry about this bounce being so extreme. Typically when this happens, we would rally back up much further than this. So that's worrisome. It's really bad. Let me see here. Yeah, you know, I'm just kind of, I haven't seen this chart before, so I'm just trying to do this. And yeah, you know what? We can't label it. We have to label it in three waves. We just can't label it this way. We have to label it this way. I wonder if X is just a triangle, but it's just not your typical. No, I wouldn't do that either. 1, 2, 3. Here's what I think is going to happen. I think it's going to go higher. I don't think it's going to go much higher than this level at some point in the future. And I think you're in a connector of a connector right now. There's really no other count that works for me. And you're in some kind of B wave. That's probably going to erase divergence soon. This is probably going to do something like this. So this is going to be really this is going to be really tough to trade, because you're going to need three waves down. I think it's going to do something like this. You see, it's probably going to build. It's going to build a peak, just like that. But before it does that, I think it's got another little drop coming, and I bet it's going to break that low when it does it. So I think this is a forecast. I would definitely, I mean, out of all the millions of stocks to trade, this is definitely one I would not even entertain. But are we building a bottom? I think you are, but I don't think it's ready yet. In the next 2 to 3 years, you'll probably back up to 1949, somewhere in this area, $24. What is it exactly? What does this company do? Some kind of digital tech company. Yeah, something like that. So good luck on that one. All right. AMAT. Let's take a look how AMAT's doing. All right. So should be pulling back in this two wave. So we're looking for a pullback, just like we are most of the AI sector, but maybe back down to 194.60. And then hopefully stocks like this, Amcor, Teradyne, all that, moon, right? Rotate. People buy these. I mean, I have a very bullish count. Why is this so bullish? Let me go back and remind myself why I did that. All the peaks are here. So we don't assume wave 3 is here. We assume wave 3 hasn't happened on the grand super cycle. And that's the personality we're seeing. That's why it's so strong, being bought so aggressively. We haven't seen the real wave 3 yet, but we're about to. We're about to. So I think it's something like this. You have a higher high. Obviously, investors want it. So this is a good one. And again, I'm just running out of space to put all these labels. But eventually, I'll always try to look at, is there another view I'm missing? Could we be in a 1, 2, 3, 4, 5? Always, like I said, I like to look at it from multiple points of view just in case I'm missing something. But see, you would think the peak on the weekly cycle would be here. If this was a 1, 2, 3, it's not. The peak's back here, so it doesn't. So this is the count. All right, very bullish instrument. So again, on a pullback on 3 waves, definitely probably want this one on your shopping list, right? All right, the next is STEX. So from charts like this, we just label it from the 0 level because it's just no point of labeling it from any other point of view, because it's just essentially go to 0 stock. And looking at it, 1, 2, 3, so that's probably an impulse right here. My guess is something like that. RSI supports it. So if that's the case, we should get another swing higher, but you have a lower low right here. But you did erase divergence. Well, yeah, you erased divergence. So let's go to let's go zoom in on that. So you have 3, 3, and then okay, you broke it again a second time. And then you erase divergence a second time. So it's definitely, people want to buy it. It's definitely being accumulated here. That bounce. So this bounce, we could still be in Y. And in fact, we would expect that because we chunk, like it's technically, yes, it could be bottomed here. It would be unusual. It would be unusual. So normally you would see it bottom around 262, right around here. So we'll go with this kind of more conservative view of it, something like this. And again, looking at it, it's moving in 3 legs. So you would think something like this. Could you still be an X? Well, if you push it any higher, you'll probably end the cycle. So either it's going to do this double, but once you come above 478, then you're going to correct the whole leg, and you could have found the low. So this may not happen. This is the more conventional view. If it can hold that, then of course it would start the next leg higher. So so I would, again, it looks like it's trying to move in 3 waves to me, and it's not done yet. It's somewhere in there. That's what I'm thinking. Somewhere in here. What do these guys do? Oh, it's blockchain and crypto. Well, yeah, then we expect this to go lower, but maybe not that much lower. Interesting, blockchain and crypto. Keep an eye on it. I've never heard of it. All right. So, Alcoa. Looks like we had that low in here. And, oh yeah, looking good. So is Cleveland Cliffs. So is Cleveland Cliffs. Now, that looks like the first one too. I think we just leave it labeled like that. Right? I mean, bigger picture. Let me see, what is that? That doesn't look right. I probably didn't label this completely. Let me go back. So ABC connector, Y. Yeah, so we're looking, okay, so bigger picture. So we expect it to fail but go higher. So at some point, yeah, see, we're in a new cycle higher. So at some point, it probably will do something like this. Right? I think that's what we're expecting. Or we're going to be in a connector wave. And Y comes later. Probably Y comes later. And see how we bottomed? Like, to me, yeah, we barely just didn't erase divergence. I like how we bottomed like that. It's tough. I mean, if we called that low, let's see if there's an impulse off of this low or not. Let's go to the monthly cycle. Yeah, see, no impulse. It's only 3 waves off that low. We never took the high out. Just want to clean this up a little bit, see if I can see it better. So it could be this, right? Something like that. Could be that. It could be, and this is probably where I think I'm going to go with it, something like that. And you get that. Something like that. Right? And because we only see 3 waves, I think this is only 3 waves. It doesn't look impulsive. So if that's the case, which one is it? I think it doesn't matter because it should go higher, right? It should push higher. And I think that's my what I would look at it. We'll go with the 3-leg move for now, something like that. And we're basically bullish off of this low, 21.24, like we've been, and we stay long, and we let the market tell us it's time to get out of it. Right now, it's not time. Cleveland Cliffs and these stocks is not like Cleveland Cliffs looks a lot worse, but like so these type of stocks are telling you to buy dips, right? They're like at this point when the pullbacks happen. So I think we'll go with this chart for now and let the market tell us how to label this part later as it develops, because there's too much conflicting data to be certain, right? What we are certain of is a major cycle finished here, and it either is ended and we're going into a massive new bull market in this company, or we're still going to correct in 2. And the only clue we have with correcting in 2 is this isn't 5 off the low, and perhaps there was a little divergence on this bottom here. And if there is, then we will double correct later. So we just have to just go with more upside for now until we see it label. Now we have seen a big move already, and to me looks like we have a 1-2 here. Right, some kind of 1, 2, 3, 4, 1, 2, 3, something like that. Actually, let's take a look here. 1, 2, 1, 2. Yeah, but it's So like I said, again, these are what wave 3s look like. The dips are almost so hard to see them on the screen because they're just bought up. Something like that. There we go. So now that makes sense. So now you have your 5 waves here. So now you're in it, like I said, the 3 of 3. I'm not sure if there was recent news that dropped or something, but that's, and again, if they're rebuilding America with all these plants, all this manufacturing, all this energy needs to be built, that's like printing, gold for these guys. I mean, these guys are going to make a ton of money. So maybe that's the chart for now. Just pullbacks, I would be encouraging you to buy on 3 waves. And we'll just have to wait and see where it goes. Okay. All right, next is VNOM. Viper Energy, COP, ConocoPhillips, and Halliburton Energy. So we have to be careful about the rug pull in energy. All right, first thing we have to be careful because of the commodity. The commodity does still look like it wants to collapse. Now, this war in Venezuela is kind of keeping the sellers on their toes. All right, looking at it, I mean, it looks like some kind of 3-way move down here. So I think this is another one of these where you just say it's moving in 3 waves. And it's probably still moving higher in Y. Let's go to the monthly cycle. Yeah. And it's the first pullback off of Y. Right. And then this is the first little X pullback. Now this can morph into other things. So this is just like a way of labeling this. So now the X wave looks like it's either finished and you're going to get Y, or it's a connector and you'll get a bigger dip. And there's a lot of room as long as you stay above that peak. So I'm forecasting energy short term to go lower. So I'll line this up a little bit with that view. It looks like 3 down, and then some kind of triangle here. It's trying to finish up, or maybe it even finished up running flat. Yeah, so it may already be finished. So something like that. Or more precise, we'll call it an A, B, C. So something like that is what I'm thinking. And if B could still push a little higher, right? So there's still opportunity, but I think downside. So where's the buy opportunity? We can try to forecast a target, assuming if energy does the rug pull, 2018, 1508. All right, so I'll just draw a box here. We'll keep an eye on it. And you can decide how you want to manage that. And again, we'd be looking for more upside. I don't think it's complete. So this is if energy rug pulls, we hold that low, we come down toward the box, and then energy, the super cycle and energy emerges. No one's expecting it. Boom. Conical Phillips. Kind of been hanging out in this flat here, and we only see 3 waves up. So we only see 3 waves up right now. So I think it's safe to assume we're going to do a double correction. And again, with energy, if energy does a rug pull, you really need to hope that your April lows don't break on your energy stocks, because those are the stocks I don't want to be in, even if there's some energy super cycle, because they're telling me they're not gonna they're gonna underperform the market. I don't want to be in those. So this may be one of them, because there's no margin for error, right? It's close to the April lows as it is. Now this box is old box that we've had. It's no longer probably valid, but I'll check it out just to make sure. Because it's already bounced too much, I think. Let me go back to the bigger count. Oh no, it's still valid. It's still valid. It doesn't. We haven't bounced enough. So you have 2 possible paths. Okay, you have this path, holds the April lows. So the energy stocks that hold the April lows, if energy rug pulls, like let's say that happens, oh, you want to be in those if this count. Now if that doesn't happen, well, it will still find support, but this will be the box. So it's either this little box. So I forecast lower. So you're either going to hit 82.72 and be saved, or it's going to come down to 75.38, and then this will turn into some kind of one, maybe a 3 wave, or maybe I have it. Yeah, one more impulse down. So it would be lower. So it'd have to do something like this. It'd have to do something like that. An erase divergence. Right, and then this would be a 1-2. So this is the worst case chart, I think. That's the worst case chart. Okay, still viable. right? But like I said, what I like to do in energy is let the rug pull come, and then when everyone's freaking out and all that, and it's, you know, oil's whatever, $40 or whatever, then we're going to look through every single energy stock, and I have a huge list, and all my members are going to see, and especially elite members, and the ones that hold these April lows. Not all of them will, probably very few will. Those are the only ones I'm really interested in. The other ones that break those lows, yeah, they'll bounce, but they're not going to outperform, because it tells you something. That's a hidden divergence in the market. If an energy stock can hold those April lows while oil craters, that is telling you that's telling you something really significant. All right, Halliburton, calling that major low in, correcting this leg. So this has to hold. Again, maybe it's service, or I don't know what these guys do, services. So maybe services are going to be okay. They don't care about the price of oil. Maybe oil, you know, they need to get more out or something to get more volume. So what is this mass? Look at that. It's probably finishing a fifth wave, you know, a 5-wave leading diagonal off of the low here or something. Okay. That's what you want to see. Now, it could still extend 5, but I think it's going to do something like that. If this low breaks, right, it's going to go further down. And then the question is, did this correct the whole cycle or just this leg? And it's corrected the whole cycle. So if this low breaks, it's going to come back down here. Okay, it's going to be a bad day for investors. So probably go down. Yeah, I'll probably all the way back down. So backing in, that's the call, backing into the low. So, but it could. I mean, maybe the rug pulling oil will devastate their business. I don't know. I don't know the fundamental business of these guys that well. So anyway, this is the forecast on Halliburton. All right, we took a look at those three. GDX. GDX has been kind of, you know, we not really participating, and really gold hasn't. So in this enthusiasm in silver. And again, we have a 5 on the daily, a 5 on the weekly, even on the monthly, on the 4-hour, double 5, 2, and then you have bearish divergence on every cycle, every single cycle I just looked at. So this is probably the peak of the peak of the peak. So I mean, that's what I'm saying. I mean, I again, if you bought it way down here and you're a trader, hey, I mean, the house lost and you won. So again, I see so many traders make the mistake of not taking anything off the table, but hopefully you've been able to do that. And anyone who's trading it that's made it this far. Get rid of this, it's not relevant. So where are we on this cycle overall? Are we going to get like a 4 and a 5, or is this going to become like another 1-2? This is the problem. 1-2. But you see how long this 2-wave took? Are we going to get another 1-2, 1-2 and take another several years? I think that's possible. The bad thing is you have to wait. The good thing is it creates an even bigger extension later. Let's go to the monthly view. See, that's so pumped. Look at that. That's the third. You got to label that as a 3-wave. There's no other way to label. You have to label this as a 3-wave. So we label it this way. So no 1-2. So I think this will come down probably somewhere in the 60s, be bought back up in 5, and rinse and repeat, and and just kind of grind higher and higher until all these cycles are finished. Right? It's when all that is finished, then you'll either have something like this, something like that, or a 1-2, 1-2. which is I think what will happen. I think you're going to get like a 1, 2, something like that. So that's what I think, but way too, we don't need to worry about it. Really dangerous if you're trying to chase it. Where on the cycle are you? Let's see. Usually go to the 45-minute to help navigate. And if that's the case, this could be your extended fifth wave. So you could have a 1, 2, 3, 4, 5. And then this 1, 2, 3. Uh-oh, I'm out of labels. And I'd say about 70% of the time when that happens, usually that is the end of the line. So I think a correction should be coming, right? As you would think it would happen soon. So that's where it looks. The way to negate this view is a big explosion higher to erase divergent. All those divergences get erased, and it's a huge moon, but not likely. Chipotle, CMG. Elite group members, we call it the bottom of that. Literally, we anticipated it and got it. We knew it would go deeper in, and now it's got its own extended fifth wave issues. Still looking for a pullback, and then trying to form this inverse head and shoulders more than likely, and then eventually turn. This is a major low. This has to hold. Again, backing into the low. You see the divergence. You're in a fifth wave of a fifth wave. It's ready for a bigger pullback to correct this cycle. But that's going to be the test, because it's got to hold that low. It bounced. It's definitely corrected this entire leg. This leg. Let's see if it's corrected anything else. Not the whole thing yet. Oh, we just crossed over. Look at that. We just crossed over. So you could technically say that it is a major low, like officially, but there is one possibility. I think I would want to see another swing higher. But if we do come down and break this low for some reason, I would at least say, okay, Y is extended, and that means we're heading to the lower part of the box. All right, but I don't think that's not the likely path at the moment. And a lot of the food stocks are going to benefit if oil and energy and some of these commodities are going to go lower for the short term. ETH, we've looked at Ethereum before. Unfortunately, Ethereum is not giving us a clear indication of where it wants to go, like the crypto market. And so this was expected, this pullback. We got it. This was my update last week. Now, look, that's why I wrote. Because Bitcoin's either going to do a massive rug pull, and it's coming right down to 1,800, 1,600 area, or Bitcoin is going to surprise people with a whipsaw higher and then a super crash. But the paths all lead. You see where all the paths go? So if you knew which one it was, tell me, because I'd want to know. I don't, like, the problem is we don't have the crypto's jammed. See, it's jammed. Indecision. But that decision's coming in the next, I think, 48 hours. So if you see it start to break higher, look for this path, probably back to 4,000. Bitcoin goes back to 100,000. Massive squeeze, but that would be a rug pull setup for something super bad. If it doesn't do that, it's going to start its journey into the abyss that we see here. And while it looks terrible, it's still probably going to stay above this low, in my opinion. All right. Roku. Oh, yeah, aren't we all bag holders? Yeah, I get it. I can't tell you when to sell or buy. I'll just do the chart, and you can make the decision on your own. Again, I can be wrong. So Roku was one that we traded when my channel first came into existence, back in even this time period, and here we are. We're like this crash, and we did have a box on it. If people bought it at 38, that's why. Did you see the color? This was my original box when I first started my channel. This was the color of my boxes. So that's how you know how old this chart is. This chart is that old. So I did do live streams back then, and so somebody got this at $40 or $38. But look at what you've had to endure. I mean, damn. Now, if you look, you've made higher highs. It's coming out. This is an accumulation area. It's accumulating. Okay, so my opinion is if you're patient enough, it will emerge out of this mess. But the problem is, you know how long you want to wait. And right now, I show 5 waves up. This looks like a flat. Could that too be done? And it's go time for Roku. You know, we normally see it correct deeper. It's unusual for it to happen. I want to say it's going to come back down to $70. But that would just be me like wishing it, right? We don't have a lot of divergence here. So it's only a 3-wave move. Down here, we only have 3 waves. So as of now, I think you can have 2 paths. It's 50. To me, it's like a coin flip here. It's either this, and you come back down to this area. Maybe you won't get to 70, but you get in. It's go time, right? It's finally. So, I mean, all stocks typically go through like a markup, a distribution, a markdown, and then a reaccumulation or accumulation and a markup, and it's cycle. So this looks like that's what's happening here. But I can be wrong. It could nosedive. This too could nosedive deeper. Hell, it can come back down to 50s. I'll tell you this, if it came back down here, I'll be a buyer because look at the risk reward potential. Here is huge risk. Yeah, there's reward, but huge risk. So I don't know. I think this, for me, Roku's on my radar for sure. We're watching it. Unfortunately, so are a lot of other traders, and it's just not getting, you're not getting the big dips at the moment. This has absorbed a lot of selling pressure. It's absorbed a lot of selling. So anyway. So good luck on that. That's kind of what I'm thinking right now on Roku. So it's a big mess. So basically, this is a big corrective mess, corrective structure mess. I'll just kind of clean it up, and this is what I'm looking for right now. And I mean, could it be? I'm just gonna always like to just take a step back and see if it could be anything else. You know, maybe I could make it like put an A here, a B here. And again, this is just another idea, and you do come back down to this lower area. Maybe, but that would be a flat. It should still support. And just kind of looking at it, see, because of this peak here, if that peak wasn't there, I would lean toward that. So no, I don't think that's the count. So and yeah, here is the correction, and that's what I'm gonna go with, man. So I think this is the count I'll go with, and I would rather buy it here if it could come. All right, and if you want to submit tickers, you just throw in you have just a super chat. It goes in through YouTube. SoundHounds is undergoing a bigger degree correction with the AI market. The unfortunate thing is this was a perma bear interpretation. Unfortunately, it looks like it's playing out, and so we're calling 5 waves from this. Another push down with the rest of the AI sector is gonna. He said the AI sector is gonna have more selling coming, guys. Okay, I think that's pretty obvious to everybody right now, and that looks like an ABC here. So something like this, right? And typically we see it lose the whole 5, so we'd want to see it come back to 355, $3 somewhere in this area. You have a gap here. I know it's an insane move, but that's the way the market is. Or this is about the market. Once we break 1030, I think the path is open to the downside like this. Maybe it could be saved still, but I don't think so. I think it's going to go through this massive corrective sequence first. And if you're, again, patient enough and wait and wait and wait, you will get it here. And then you'll have an amazing chance at it again for one of these huge runs. That's my thinking on this. All right, and then LCID. I don't know if our chart, Lucid, if they split. Yeah, they must have split. We lost our chart. Or reverse split or whatever these guys have been up to. Let's see here. So, a lot of divergence, but the monthly doesn't show any. So, more than likely, it's in a fifth wave of a third wave move. That's good because that means it may be at a low or getting close to a low. If, again, stocks like this can go out of existence. Ask Fisker, right? Remember Fisker? They never recovered. So there's the one thing about these stocks is in the grand super cycle corrections, there's no guarantee it ever goes back up ever. So while we show these charts and love to look at them, there's some stocks that never recover. So I think it's probably close to an opportunity to find a low. Can I guarantee a low? No, but it seems close. Let's see where we are with Y. So like I said, it looks like we're in a fifth wave of a third wave. 1, 2, third wave. And then a fifth wave of a third wave. That's what it appears to me. Just kind of looking at it. It looks like it's about finished. I 3 call that 5 here, so I can ABC probably do this, probably call it. I have to go to a 4-hour. View something like this. 3, 3, yeah. So A, B, let's see here. A, B, C, D, E. No, that won't work. A, B, C. Yeah, I think looking at it, we'll probably label this. To me, that's where it is. Sometimes, you know, you don't get all the data on TradingView that you need. I mean, did one of these lows break? Do we have all the data? To me, this is the corrective structure X. I mean, I'll have to stare at it more, because it looks, everything else lines up for this to be the close to the low. And then let's take a look at this Y wave. And of course it makes a lower low. So unfortunately it didn't quite bottom the way we would have liked it to, and that's probably comes back up to here. So let me take a look at that again. It may not be done yet. It may be an impulse. That's probably what it is, what it's in. Yeah, it's probably not done yet. Let me just think about this one for a minute. let's see here. Yeah, that's probably what's happening. It's probably going to do something like this. It's probably going to do something like that. The higher high on the RSI is the clue that it's going to resolve higher than price. So I think it's going to do something like that. This is some kind of B-wave connector. That's why the low doesn't, I think it's going to whipsaw back up. So that's what I suspect is going to happen. And then it would fail at some point. So I think it's close in any moment to doing that. Let's take a look here. Weekly, monthly, daily. Yeah, see the daily cycle wants to come higher. So my guess is it's going to do something like this. And then it's ABC for 3. 1, 2, 3, 1, 2, 3, 1, 2, 3, and then boom, you come up. And then you resolve the RSI issue I'm seeing here. That will resolve that. The price will the RSI obviously would explode higher. Price would be, and then everything kind of, because the price shouldn't be down here. It should be up here. That's the problem. That and maybe I'm not seeing it. I could be maybe just tired or something. But I think this is what I'm looking for. What is this? Let me just remind myself again exactly what these guys are involved with exactly here. I think I know, but let me. Energy storage, okay. Plug-in hybrid electric vehicles. So we know that sector trades with the solar, TAN. And what we know about TAN is it's coming off of a major low, like a huge low, and it's on its first pullback, right? And that pullback maybe even has ended. And if that's the case, if this is it, then these forecasts I think line up. That also tells you, is this war going to really be pumping oil and energy soon, or is oil and solar going to finally decorrelate? They're not going to be correlated, because we're going to need energy storage and we're going to need solar to power the AI sector, and then that would that may hurt these guys because people won't buy EVs if oil drops, and then this chart just is wrong. I'm wrong. So I don't know. I think this one is tough. I wish it's hard to stump me, but this one may be one that has because the data doesn't work because of that peak here. And so there's either two things: either TradingView's missing data and we bottomed and I'm just missing it, or or there's something more like this. It's going to have to resolve the price higher to correct that anomaly. So that's all I can really say on that. I can't spend any more time on that. Thanks, Alwyn. I appreciate it for following me for 3 years. Yeah, a lot of people don't know. I've been around a long time. A lot of people are like, oh man, you got a YouTube channel and how you got these followers and stuff, and I only have 10 followers, and I'm like, well, how long you been at it? Well, like 4 months. I'm like, guys, I've been doing this since 2021, and I just did it not even to get followers, just because I love doing it and wanted to help. And I think that's the thing. People that start YouTube channels need to understand, like, you got to love and do the videos because you want to, and then the followers eventually just show up, versus I need to do it and get 1 million followers and go viral and just make up crap and hope people like that's the wrong approach. But yeah, I've been at this for a long time when you think about it. Videos constantly. All right, next is DXYZ. That's one we did a deep dive on. So again, a lot of people, not a lot, but people dislike my deep dive video. I don't know. I guess they don't like making money, or I mean, this would have helped you, right? I put the box. I said this is probably where it's going to get rejected. I told you about the overvaluation, the NAV, all those things. But hey, you know what? Again, it's better to bust your TV, hurt the weathermen, than listen to the weather forecast. So something like this is probably what I'm looking for, and then a bounce, right, and should continue lower. So that's something like that is probably where we're going with it. And again, it needs to move in 3 waves. So that's what we'd be looking for, something like that. As long as it's below that peak, downsides expected. All right, CoreWeave was in danger of having meltdowns, and then of course they saved it. Here we have a lower low, so you see I have 3 waves down. We talked about what that means. It means it's going to go lower. So it's just a temporary squeeze, and in fact it can be shorted now if people wanted short this. But I would wait for 3 waves. I wouldn't short it on something like this. So you'll have to decide how you want to play that. But if this is to count, we would expect another leg lower, right? At least another leg lower. 40s, right? I'm thinking now it's the 40s now, or lower. And you want to see all the divergence arrays. Let's see if we can get a box from our major connector. We do get one, 48.77, 24.62. So that's probably where it's trying to head. Somewhere in this vicinity, somewhere in here. Okay. And then XPEV. So we expect the Hang Seng to continue lower. That will push these stocks. Now, it never really made a connector wave, a proper connector wave. You see that? No bounce, essentially crash. So we took the first bounce as the connector wave and projected a target at 1356. If it continues in a crash correction, that's the area, and that's not right between the 4 and the 2. Chart support right around exactly the confluence at 1356. But I wouldn't and then have another low later, right? It looks like it's trying to do that even right now, right? So if we may have to, looking at it for the first time, you see how that bounce took those low. So yeah, I think we have to shift our connector. So it's either truncated and done, but we know it's not likely to do that. So right now it's bouncing. But the problem is the rest of the forecast for China and the China tech is lower. So why would this go higher and the rest go lower? It makes no sense. So we would forecast a double correction. So we have to forecast some kind of double correction. So we're in a connector. Worst case, right? It's shallow. And B is done here. But I mean, that would be pretty bearish. But let's see where that target ends up. The worst, again, this is worst case scenario. Goes lower, right? Goes even lower. Because what happened is people bought it too soon and they're all trapped. So now you're looking at 995. If B goes higher, the target goes higher. You see? So there's no more setup. There's no more direct setup. We have to just keep an eye on it now. So we have to just wait, watch, and hopefully this area gets tagged. I think it will. If you're patient enough, I think you will get an opportunity. All right, bull. I think people are posting a lot of messages on the internet I see of anger about this stock. Let's see here. Remember we talked about only 3 waves up. Now we're pulling back. in what looks to be 5. So, you know, got to manage your expectations. It doesn't look good. I would say it looks like it wants to go lower, right? If this is 5 down, it means you need another swing down, and you're probably going to break that low. We have seen these whipsaws, and this is a great stock to do that in, right? Where they do something like this, right? And then it goes lower. So we see this so many times. So I think, you know, you have to expect the unexpected with this a stock like this. This box is not relevant anymore. So let's move that over. That was for here. So I think I'll go with something like this, like kind of tricky, because the RK, these speculative stocks that I'm seeing out there don't appear like they want to just go to zero. Like, I think, at some point, but I do think if it breaks this low, of course it's a broken chart. So I think this is what I would expect as of now. But it looks like it could rally soon a little bit more. All right, UVIX. Yeah, so UVIX was the huge battle. There's this huge battle of volatility. I think that's where the war's being fought in the control of the market, is through the VIX. And it was boxed in. I do think the VIX is at, again, it's still in this 1-2, still in the 1-2, but it's almost like, again, so much selling, and they're trying. It's again, this is the way to pump the market through these VIX squeezes, and it's just when the VIX is down here, it's harder and harder. So they're just trying and they're trying and they're trying. And someone pointed out, I follow, that the VIX did this before the big move on the 31st here, somewhere around here. I go back and look. I know we had this kind of flash crash here, but I guess there was like a big sell-off. I don't know what day he said it was. Maybe it was here or here. But obviously, here you had the VIX being pummeled, and then, of course, it finally gave way. We're going to see something similar, okay? I just don't know when exactly, and the UVIX is in the same thing. What is fascinating to me about the UVIX is it's in a channel, and it tagged the edges, and it's tagging the edge again right here. So the box of boxes failed, right? This little box, this was the technical battle. Obviously, it had some meaning, because it wasn't just random that the price got boxed in here, because this is where the battle was, but then the battle was lost, right? They lost the battle. Although the market didn't really rise that much, look at how much it fell. It didn't really, so it's losing its juice. But now it's on this support. Where have we seen something like this before on our live stream? Does everyone remember Tilray? I've seen this chart before. I've seen this movie play out before. It's a different character. Look at that. Haven't we seen that before? Something oversold, just slammed down, and it got to the point where I was on my live stream. I said, just go buy it. We were here. I was just like, just go buy it now. I don't even need to chart this. I told whoever asked me this, I said, I don't even need to chart this. I knew it was when you look at this, it's an ending diagonal. I just said, go buy it. Buy it right now. And that live stream's out there. You can watch it. And it was this was pre-split here, 30 cents. It happened with the UVIX whenever it finds a low. Where are we in the channel of the UVIX? Are we here or are we here? That we don't know. So I think my thinking on the UVIX is it's going to have an explosion out. And the only way to get it is your stop loss has to be 0. Your stop loss will have to be 0. And you'll have to, it's like YOLO money. It's like money that you're betting on, and waking up one day and it's up 100%, 200%. I did some work with the ChatGPT on this. I said, in 1987, if this product existed, what would have happened? How would it have priced going into that day and going, before the day and going out to the day? I said it would be up 10 times. So it would be up 10 bagger in 24 hours. So 6 would be up $60. you would wake up and it would be up at $60-$70. That's what it basically, and they said the product would likely fail because the market makers would like essentially not be able to deliver, and it would essentially the product would go away. I don't know what that means exactly. I don't know if it means everyone loses their money, the longs and the shorts, knowing no one wins. That was the whole product like fails. But basically, this is just a lottery ticket now. It's a lottery ticket, and the only winners are going to be the ones who have a stop loss at 0, and they're playing with whatever money, YOLO money, mad money, whatever you want to call it. And one day you're going to wake up and something bad's going to happen, and this thing will probably be up here or higher, and then you'll say, oh cool, I'm glad I owned it. And then everyone's going to pile in and buy it, but it'll be too late. So that's my take on the UVIX. But we are in a channel. We have seen these channels develop before, and typically when eventually they break out big. It's just, where are we on it? Can it continue to drift lower? It might. It sure as heck it might do that. So that's all I want to say on the UVIX. Yeah, I think that's it. Let me see if there's anything else. Bullish divergence. Monthly, you can't, it's not even a point to look at the monthly. Bullish divergence. Bullish divergence. So you have pretty much bullish divergence on every time frame. So I would think, if you were like, I wanted to buy a lottery ticket, I think Friday at close buying UVIX was a hell of a nice little lottery ticket play to buy. And I bet the calls were trading in the pennies for 2 weeks out. But so I mean, guys, the Vega in your calls, buying puts right now has got to be super cheap. Look at the VIX. You guys, I don't trade options, but I'm smart enough to know a little bit about them. And I would say this Friday was a day to buy puts, because you'll make money just on the Vega, on the volatility. The market doesn't even have to go down, just on any kind of volatility bump. This is unusual, right? And there are posts on the Twitter, people that look at this and they're noticing. A lot of people are noticing this. So I think they're overplaying their hand. Whoever's crushing this volatility is over. There's a Volmageddon. There's going to be a Volmageddon event to release this energy. But someone's going to get blown up big on this. Let's just hope some of these products don't fail when it happens and they can deliver. Okay. BitX. Well, we don't like that until we get Bitcoin in a better situation. Now, there's a speculative play on BitX down here at 76,000, of course. I look at it, but you can do what's best for you on it. BitX did tip the market's hand once for us before. Let's see. So big consolidation here, and looking at it, the most bearish interpretation of this puts us right where it found support, right there at 25. You see that? Could X be done? Yeah, maybe. So this could be the idea that Bitcoin does a Christmas pump, right? This Christmas pump where you don't even get down to here. It does like something like this Christmas pump into our short area, right? And you have to ignore this labeling, but it'd have to do something like that. This would turn into some other count, but we don't think that's going to happen, right? One, we have 5. Look at the way it's labeled. It doesn't make sense, right, to call that. So we got to look at we'll go back and look at it. So we have to think it's going to go deeper in the box, right? Of this box. Now this box goes to 0, so the box essentially is meaningless. So we're in this leg lower. 1, 2, 3. 1, 2, 3. 1, 2, 3. Right? A little bit of divergence. This bounce corrected that leg. We made a lower low. So looks like to me looks like we have another leg lower. Right, I'll label all the sequences, but what it looks like to me is we have something like something like that, and then that's an ABC. So to me, it looks something like that. So incomplete, needs another leg lower. So it needs another 3 waves down, and it hasn't got there yet, but it should start soon. Now that, like I said, now if Bitcoin wants to play around, it could. Bitcoin goes to 76,000, it may do this, come back up like that, do that, right? It could do that, or even come back up like that. Could just crash and finish. Right? A lot of options. So I think this is the primary view right now. All right. Lunar was an update I gave for my morning update. So watch my morning updates. I'm always going to pick like a stock. And like I said before, if Lunar took out that peak, it would be up here, and that's where it's going. But I wouldn't fall in love with this. It's likely to come back to Earth, so to speak. And my guess is 1561, 1740, somewhere in this area. This box is going to be not as accurate because of the way the connector looks. So you need C, so you need 5 waves, right? You need 5 waves. You only have 3, so it's more upside. So it's more upside. Okay. I think people now are starting to be like, oh, they're going to put data centers in space. They're just going to, go in. There's going to be a rocket ship, and they're just going to like open the door and let like servers float around in outer space, and that's where all the AI is going to be. Like this is like, again, these stocks are running. And again, I'm not sure Lunar, but the space stocks is like, oh, I'm a dream, but the reality to make that happen hasn't. We need to think through that, and maybe they can get data centers in space one day, but right now I don't know of anyone doing that. So there it is. That's the chart. Okay. SMCI. Probably not looking that good. If what else is happening in so we had this high risk area. We failed. See the lower low here, so it turned into an ABC off of that peak. And I keep telling people, if you're trading it, you're in a very dangerous setup, because we have the bigger picture on this. Is this 5 waves down. So at some point, wave 3 is going to come. And it's probably, that's the end, that it's going to be a bad day when that news comes out. So we have 3 up, 3 down, and we never took this high out. So we're in the middle area of whatever this is. So this could still be B, A, B, C, D, E, and I could put 2 here. Well, now that doesn't work. We'd have to, I don't usually like to label triangles on 2s, so let's take a look here where we're at. Yeah, my guess is, just looking at it real quick, looks like 5 down here, 3 down here. See, yeah, I think we'll just let me just look at this chart here. 3, 3. Yeah, I bet it's coming back up higher. I bet you're going to get one of these little happy pumps. So, hey, if you want, again, so just make sure your stop loss is essentially 0 in your mind. We still had this box here we never tagged. I wouldn't be surprised if it does one of these crazy moves. Just something like that. All right. I don't like that, but it's erasing on the higher time frame, so we may be just seeing the fifth wave of this third big long wave here. So I think if you wanna speculate, again, this let's get rid of that. I don't know why it would do it, by the way. I don't know if the AI is breaking down, does it have any news events coming out? I don't know if it has any kind of news event. I don't follow this company. We probably would get a little bit more downside. So let's just do this. Let's just assume it's a big corrective structure. So it's a big corrective structure. We would put the target right here around 24.38. So I'm going to draw a box. If you decide to take it, and there's massive overnight gap risk, perhaps go to zero risk even. So essentially, I would just have your stop loss in your mind at zero, and I would be looking for something like to have this finish down here, and really one more leg. That's what I think. Because it doesn't seem like I can think of any other structure that works at the moment in something like this. Right, nothing else works for me. And then this C leg could be 1, 2, 1, 2, 3, 4. Let's go back to the 4 hour and look at this. Bounce is too big, so it'd have to be like an extension. Like that. Something like that. So basically what this is saying, this chart is saying, it's either going to go to zero and go out of business, go bankrupt, go, a fraud like some people think. But if it's not a fraud, it's completely mispriced, and it's going to have a huge upside move as people realize. So that's what I'm saying. It's a big lottery play. To me, the worry I would have is 5 waves down. Now, if we break these lows, so I guess technically we don't. I say go to zero, but you really need to leave it if you break these lows, because then the bullish setup definitely is lost. So that would be around 1724. So there. So there's the box. There's the setup. You can decide if you want to, give it a shot. We were playing around with it back here, right? And then we kind of just got bored with it, and then we saw it hit these sell areas, you see, and then it's really never recovered from that. But it never really hit the final target. So, and then when you look at the structure of these waves, it looks corrective. And this looks corrective. So maybe it needs another leg higher to finish up, to finish the pattern, right? Because if I put the corrective wave here, if I put 2 done, you would expect it to have 5, 3, 5, 3, 5, and you really, I see 3 waves here, right? 3 there, 3 there, 3. So I'm not seeing 5 waves. All right, and I wouldn't call it a triangle. Even if I called it a triangle, yeah, I wouldn't. W, A, B. No, I wouldn't call it a triangle either. So that's the only counts that work for me on this. It's either going to be go to zero or this. Go to zero or this is what I think. Now when we're up here, the technicals could come back in to haunt the company, and then you may get something much more bearish. This would be just like trade, because again, it shows that 5 waves down. That's what's bothersome about the chart. All right. Okay, can I turn on would you turn on transcripts? Would you please turn on transcripts for your videos? I run videos in this genre through GPT. I'm not sure how to do that. I've never done that before. I'm not like very savvy with all this video production stuff. As you can see, I just get the message out there, guys. I'm not like an artist when it comes to videos and things like that. I'm trying to get better. I know you've seen me post a couple things with captions and things like that, and so I'm trying to learn myself to kind of step up my game on my videos as I'm growing and trying to polish things up. But yeah, I don't know, if you want to message me or tell me how to do that, I don't mind. Someone told me my resolution wasn't like, I fix things like I can fix once I get feedback. So if it's something simple as turning something on and off, I don't care. I'll turn it on, but if it's a lot of work, I don't have time to be doing transcripts and shit like that. I'm too busy to do that. All right, I'll go through everyone's comments. I got through all the super chats. I'll just kind of read through if anyone has any other comments they want to talk about. I didn't answer. And let me just see. Talked about the UVIX already. Oracle bottomed. I gave an Oracle forecast at some point, and I think it's going lower, even though it may be bouncing. And appreciate all the support you guys are giving me. Thanks again. Lost decade, yeah, I agree. Circle, NAK. Just if I have the charts done, I'll mention it. Some of them I don't have done. All right, and platinum's topping at a 5, a fifth wave, like the rest of the metals at this point. We're keeping an eye on divergence, whether it erases or not. And again, I'm glad I'm helping people out. JPM, yeah, I think the financials are very close or have close to a major peak. It's a super cycle degree 4 wave, which may support our Berkshire Hathaway like idea, like it's not ready for a super duper Great Depression crash just yet. But it is a heck of a pull, like a multi-month year pullback. Like it could be a pretty big pullback soon. But I can be wrong. Maybe we are going into Great Depression number 2, and then of course they will collapse like in 2009. They would, or 2007 and 8. They will collapse like that. Yeah, I just need to figure out how to do this transcripts. I'm not sure how to do it. I'll have to figure it out. I'll just if someone knows, quick, tell me. I'll figure it out. I'll make a mental note and try to make the improvements. That's what I'm trying to do, make improvements, and slowly we'll get better at this. And again, I don't have I'm a staff of one, right, too, and don't have like people working for me making charts and things like that. So we just try to get as much information as out there as possible and make it easy. I know there's some people, I know one person in particular who follows me. She uses AI to summarize the videos, and because they don't have time to watch these long videos, and I guess it's working pretty effectively. I've never tried it, but always check. You never know. AI could be wrong, right? I guess sometimes they may, even with one letter's off, it could really screw you up, right? So I don't know, but we'll make it work. We'll make it work. All right, guys, that's it for this live stream. Thanks again for everything. Let's see if we can do one tomorrow night. If I have time, I'll schedule it. If not, talk to you guys later, and hopefully Christmas will be good for those out